Hi friends, welcome to one more video on UAE VAT. Today we're going to talk about hospitality industry. So something which we cherish, we enjoy, we go for so many things in those hotels or restaurants we are talking about. Just to give a perspective, what I'm going to talk about can apply to education sector also and hospitals also, because the model typically is in the same lines. So, but I've taken an example of a hotel industry, and let's see and understand what kind of implications or what kind of minute points which we should also look at when we are assessing the taxability for those industries. Now, first, let's look at what are the stakeholders. Who are the key stakeholders in any hotel? So there are various options we can look at. Some person can have an authority to work on two stakeholders. But what example I have taken is I have taken that everyone is operating individually. And with this assumption, I'm going to give the scenario for today. The first stakeholder, we can always talk about the license holder or a hotel, which is approved by relevant authority. So we are talking about someone or a hotel which is approved and has a license to operate as a hotel in United Arab Emirates or any kind of emirate separately. Second, there are independent POA holders. That means the entity specialized in providing technical know-how appointed by licensee holder to operate the restaurant, club, spa for fixed fee or a percentage of net revenue. What I'm talking about here, I'm talking about a specific restaurants or the clubs you see in a hotel which has their own brand value or a brand. So these are not at all having a, I'll say maximum cases, these are not having a separate license to operate. How they operate is they operate within the framework of the specific hotel licensee, but they have a power of attorney or a power of authority to operate it independently. Now, how they share the fees, there are various methods which can be maybe fixed percentage or a fixed revenue or a fixed value. So it can be anything which you can look at. And the last foremost thing comes is the property owner. That means who is holding the asset or the infrastructure where the hotel is being operated in. So these are typically three scenarios or three stakeholders we look at a hotel industry. Now, let's look at this pictorial diagram. What I have done is I have just given a specific line items which comes from a hotel industry and how and what kind of a VAT treatment we should look at. So first, I'm picking up a license holder. So as we know, license holder is a person who can operate or who is operating the hotel at his own end. So in this case, technically speaking, if you see, they will have the invoices being raised in the name of the hotel only. The TRN number should be used of the hotel only. And if this is happening, then technically speaking, the hotel will pay output tax on account of all the hotel amenities, expenses, even the restaurants which are part of the hotel. The invoices are done by the license holder. Now, what happens to the input tax? So they have various input tax. We are going to look at if, let's say, this hotel is getting operated on a rental premises. Then any kind of a rent, what is paid, there is a VAT element, and that can be claimed as an input tax. Second comes, if there is any professional fees or professional charges this hotel is paying, they can claim it as an input tax, or any other running expenses which are being operated by the hotel become part and parcel of it. So this is one leg. Let's look at the second leg. Second leg, it is a property owner. So if a property owner is different than the license holder, definitely the property owner is going to raise a tax invoice on the basically hotel rent, which we are talking about a commercial rental. So this is definitely a VATable transaction, and any kind of input tax which becomes part of operating that physical premises can be claimed by the property owner. Let's go to the third part. The third part is an interesting element, which is what I talked about. Let's say if a restaurant is operating within the hotel. Now the restaurant is operating as an independent power of attorney holder. Technically speaking, they will not have a separate establishment or an entity operating as part of the hotel. So what normally they do, they will issue an invoice, which is issued by the license holder. That means all the invoices which are being given by the restaurant idly. I'm talking about idle scenario, but there can be a different exception. You need to look at a specific case level. In the idle scenario, the license holder will be issuing the invoice. Now, what will happen to the income? So technically speaking, let's say if the license holder is issuing the invoice, the independent POA holder is going to raise an income invoice or raise an invoice to collect the amount being collected by the license holder. So in this case, the independent POA should raise a professional invoice. Now, how this professional invoice can be raised? This can be a percentage of turnover or the net profit which is being arrived at the business model, or a fixed value. So this depends on what kind of arrangement or what kind of agreement this independent POA holder or the restaurant has made with the license holder or the hotel license. Now, in this case, you will see the taxable expenses which are done by the independent POA holder can be claimed by him. So look at all the three perspectives. We need to segregate if these are done by different individuals or different entities, and hence we cannot call a hotel or an activity as a single license and mix up every input and output tax. We need to clearly see who is operating or who is conducting what role in the hotel industry. Similarly, you will see the same things happening in the schools also. So schools are run by a license holder. That means they have a school license. The property may be of someone else, and the true KSD approval or something can be of the third party. So these models you can see even in the hospitals also. So wherever these are long-term subscription things or long-term expenditures thing, you will find a breakup between, as I said, the license holder, the power of attorney holder, and the property holder. So these are three different elements need to be looked at very differently, and this is how we need to see how the taxability impact is coming. Hope I'm able to add some value in this session, and if you like it, do give me a thumbs up and do subscribe to the channel so you keep getting the feeds and the messages or the information as and when we put it up. Thank you very much. Wish you a good time.